Hello Leeb reviewers, this is Scott Chan with the video for November 4th, 2009. We had a late afternoon sell-off today in the final hour trading that wiped away most of the gains from earlier in the day. For the day, we were essentially flat. Oil inventories fell, which some see as a bullish sign for the economy and for oil. However, in our view, if oil prices go up too high too quickly, that's going to have a dampening effect on our already brittle economy. And also the VIX index, otherwise known as the fear index, had a late afternoon spike, which coincides, not surprisingly, with the sell-off in the equity market, indicating that investors became antsy about this market as the day wore on. There was no obvious catalyst to the sell-off, but perhaps investors just wanted to wait until after the Fed's decision in the afternoon on the interest rates to digest the somewhat disappointing reports on jobs released by ADP and ISM. ADP reported that for the month of October in the private sector, the number of job cuts was a little over 200,000, while the number of job cuts has decreased month to month for 7 straight months. October's numbers were still worse than expected by about 10,000 jobs. And the ISM's report on the service sector had a reading of 50.6 for October, which shows very slight growth. However, this was a decline from the 50.9 reading we had in September. The biggest culprit continues to be unemployment, as businesses continue to be hesitant to make new hires. So we are continuing to see the same trend. The job market is showing some signs of stabilization in terms of getting less worse, but it certainly isn't improving yet. And probably the most important news item from today, as far as the market was concerned, was the Fed's decision on interest rates. Not surprisingly, the Fed decided to keep rates unchanged at essentially nothing. Over the last 30 years or so, the Fed has historically waited about at least half a year until unemployment has peaked to hike interest rates. And with the economy still so shaky, businesses aren't going to be in any hurry to hire any new people on any significant scale until months after they're sure that the economy indeed has recovered and it's out of the woods. So we are likely going to see rates remain at zero for quite a while longer. That's it for today. Thank you for watching, and join us again tomorrow.